Hello everyone, welcome. My name is John Slazis from Dharma Capital Trading, and today I'm going to go over the Dharma Capital Trading Weekly Outlook on Substack. Just give a little insight to the commentary that we have as well as the graphic images that we're providing you with. So this is all complimentary. We start the week off and publish this on Sunday evenings. Here we're going to go over Bitcoin Perpetual. So we always give a little highlight, time to play a card. Market's going to make a decision. Give you a little color there. Then immediately we just start out with the general overview and what's the bias. Bottom line. Bottom line, the market this week is rotating off the 34,915 weekly directional. When I say weekly directional, that has to do with our price map. So these price map levels that I'm going to get into in a bit here. But we're always referencing the structure, and I'm going to go define the structure as we get to this point. As well as the structure, we're highlighting the state, so the state context. We're defining the state context as bull trend. Because it's in a bull trend, then we're going to define the structure points that confirm or deny that. In this comment, we're identifying, hey, the market's in a bull trend, but the sentiment bias, which is at 30,965, is way below the market. So we're in a positive trend, but this is where the real buying energy is. So that can be an issue in this context, because buying energy is down here, meaning that if we do get positive movement, it's not going to have as much energy, typically. It's crypto, anything can happen, but typically when energy is way below the market, it likes to digest a little bit before it makes a move. And so that's what we're highlighting here. And we're going to identify this 35,000 strike as your profit give back adjust. So if the market, this is in alignment with this 34,915 directional, as well as previous week's midpoint, previous week's close, which I'm going to get into. So you have a lot of alignment coming in here at 35,000. That is just saying, hey, that's the strike to key off of. If the market's trading below here, it's going to have issues, potentially down to sentiment. Above here, it's all good. Positive momentum's in play. And so that's what we further define in our structure. And we're going to, because we are keying off this 35,000 level, if we do get a failure below there and the market can't base above that price point, it's going to put the 33,950 previous week low and 33,342 weekly downside pivot in play. So basically identifying that if we can't hold above 35,000, we can trade down to this previous week low point or this downside pivot area. We're saying maintain focus. We need to really dial in as the market's approaching these levels, because the expectation is that we're either going to base here for a new advance, or if the market can't stabilize here, it's more likely we're going to extend down to this area. And we further highlight this as 31,200 into it, so we're saying this upper metric boundary. Anywhere really within this zone, we're anticipating from a failure from this level. And the reason we come out with this commentary first is because the market's trading below that price point. So that's typically what we're doing. Where's the market within structure when we publish? We're giving the, what's the current sentiment tone at that moment. So Sunday night, this is where we're at. And then we're identifying if we do start basing above 35,200, which is really this metric boundary, and it's above the previous week's close and midpoint, that's going to put the previous week high in jeopardy, with the expectation the market's going to extend up to the 37,304 CRX plus. So CRX plus stands for critical range positive extreme. And I'm going to get into what that critical range is in a minute here. But we're coming in here and say, hey, don't press it. We're wary of this market's ability to extend currently. And a lot of that has to do with what's going on in the microstructure. And we're focusing on funding rates, which are currently still expensive. Implied volatility is rising, and with the higher funding rates, that's going to warrant a defensive expectation on higher spot prices. Basically, it's in alignment with structure, because structure is sentiments below the market, telling us already that structurally this market's extended, which is what we're seeing in the skew as well. So we've got the microstructures in alignment with the macrostructure. So I'm going to go get into the analytics a little bit here and just kind of build this up step by step on the different things that we're identifying. Is one of the main things that we like to look at is time frame structure. So we're all about fact-based solutions. What are the main facts? We'll identify the previous week's high, previous week's low point, the previous week's close, and midpoint. So this is a range that we have to get some sense of what this market can do, where it can go, where it wants to test. And so right now, as we come in, and now we're finishing up Monday's action, but coming into Sunday, we're kind of rotating around this area, and we still are. So it's just very choppy around this area. The midpoint and close are in alignment. Market typically is going to want to make a play for either the previous week's low or previous week's high. And we haven't done that yet. So we're performing to the expectation of this market going nowhere. Next thing we talked about was context. I'm going to bring in some other analytics, and everything that I'm showing you is available through the Dharma Capital Trading website. And here is our playbook. And this is where we're getting our context. So we talked about that Bitcoin perpetuals in a bull trend context. With expectation, the market's going to perform as any bull trend, making higher move highs, higher move lows, and then we're identifying that structure on the weekly basis. As we get into that structure, I mentioned that where's the buy-in energy basis the weekly. We have an integration that you can get involved with as well, and this is telling us here that the buying energy is below the market at 30,965. Now I'm going to add some metric boundaries around it. So we have what we call a variance. It's really the kind of a slippage area. This is the ideal entry area. And then we also have what we call an alert distance. So you can use this for your signal acceptance. So when you're using weekly outlook, these areas are where you want to engage in the market. And for buyers, this is the ultimate buy area. So the price map is a risk management overlay. And so you want to use these levels to establish positions, to hedge the ones you have, adjust your risk, adjust your profit give back, anticipate opportunities, anticipate proactive risk management adjustments. And that's what this price map is meant to do. It also helps you to identify the value of an opportunity. So when we come in and the green line is our sentiment bias, it's our what we call our R level or reversal level, the over-under number. Buy breaks above here, seller rallies below here. This is the main price point. This is where risk is at for the week. This is the best buy area. This is where the biggest size should be traded from the long side or really any trade. This is your max size area because this is where the real liquidity for this week is. It's way below the market here. The next level I'm going to pull up is what we call our directional. So this is a pivotal point. It's a rotational number. And so if we know this market is in a positive trend, and we know that this is the lower trough of that positive movement, this becomes a key pivotal point where as long as the market's above this point, the bull trend's all good. And if we're trading below this 34,915 this week, it's telling us that we're going to be in a corrective trade of that bull trend down to this area. So now I'm going to add what we call our critical range. So the critical range represents that upper peak for the bull trend as the market's making higher move highs. And if the momentum's going to maintain a good positive momentum, it should be stabilizing above here. And if it can't, we're going to get a retrace back down to this 33,342 downside pivot, which we talked about in our commentary. And if we can't stabilize here, that corrective trade can come down to here. So when bull trends correct, they typically correct either in a sideways digestive pattern or they correct with sharp breaks. So that's what we were talking about in the commentary, that if we're going to have more of a digestive move in the market, it's going to stabilize here. Otherwise, we potentially have one of those sharp corrective breaks. The next part of the critical range is what we call our validation levels. And so this is where we're looking, if the market does stabilize here and it starts to build positive momentum, where can it go? This is what we call our critical range positive extreme. So if the market does break out above this point, it needs to validate above here to go higher. If the market is stabilizing above here, and we've got nice alignment with this metric boundary and this time frame structure, we need to validate above here to get that positive surge. Same thing on the downside. And so when you see time frame structure and price structure in alignment with market structure, which is what these price map levels are, that's when you really see a lot of value, when you get this alignment and confluence. So we're always observing price action within market structure. So as a recap here, time to play a card. The market's wound up. It's trying to figure out which way it wants to go. What's happening? Well, it's rotating around the previous weekly close, which is here, and the 34,915 weekly directional. So we know that's the pivot point, and that's the rotational number within the critical range. So stabilizing above here, rotate up to the upside pivots. Below here, rotating to the downside pivot. We know the context is bull trend, so we're anticipating price action to look like a bull trend, making higher move highs, higher move lows. That's the definition. This kind of action is not performing to the expectation of a bull trend. It's telling us more digestive. It's breaking structure. It can't hold a nice pretty trend. That's what it should be doing, and it's not doing it at this time. It may do it at the end of the week, but currently it's not doing it. So we're still time to play a card. Market hasn't played a card yet. And we take into account, what economic reports are coming out. Nothing's coming out till Wednesday, so we may have to wait till that. We've identified that sentiment is way below the market. So it's way down here. We know that by definition, that's telling us that the energy is lower and the market may have some issues extending at this time. So that's what we're highlighting. And if you're going to make any adjustments, you can key off this 35,000 strike. Because when the market makes a move out of this area, that's the strike it's going to make a move from. So if we do get held trade below this 35,000 level, the market's vulnerable to a drop down to the previous weekly low. So we'd see the market starts trading below here and can't base above this level. The expectation is we're going to rotate down to this area, if not this area. And that's just more normal digestive bull trend action. There's a pause in the positive momentum. We're going to digest. And we want to dial into how the market behaves in this area, because if it can't stabilize and start basing here and start building and then start a new higher move high, higher move low impulse, we could see this sell-off extend down to these levels. And then conversely, if we do see the market holding above this metric, so above 35,200, the market will be basing above this directional metric and the previous week's close and the previous week's midpoint. What's the expectation? Well, we're at least going to make a play for this area, which is the previous week high. And there'll be steps along the way and hurdles, and this will be a validation. But the expectation is it's at least going to come up to here, and more likely it's going to come up to this critical range positive extreme, which would be more of a capitulation. So if we did get a real excitement in the rally and we don't top off here, or maybe we reject here for a day and then we get one of those big surges, the expectation is that it's going to not follow through, and this is going to contain that move because of what's going on in the microstructure. So you can use this structure to trade directionally. You can use it to adjust your risk. You can take advantage of the expectation of no follow through. So getting a positive surge, fading, selling volatility at these upper strikes during that surge. One thing I want to mention about this price map structure, it identifies the segment moves the market's trading in. And a one segment move would be basically the distance between the upside pivot and the directional, which is basically about $1,600. for the week. So these are weekly segments. So you're looking at least an $800 move on a half segment move. So when you're adjusting your risk reward, your minimum expectation should be going for $800. And you can use these metric boundaries to make your adjustments. And you can also use the metric boundaries for your delta hedges. So as the market moves outside of these metric boundaries, it's a tell that the market's going to go in that direction and follow through. This level by design is rotational, so it can be difficult, which is what's happening currently. So you have to be prepared for that. So here are the previous week's structures. So I just wanted to show you different scenarios of how the market behaves around the directional, the yellow line. And so either you get this kind of really difficult choppy action, or you get something like this. Some of the biggest moves happen from the directional, but they usually happen right from the get-go. This is the initiation point for a lot of major moves, is the directional. And it looks good when you'll get a little bit of movement around it or near it. This was very positive because it was above it. Sometimes it's a little lower than that, but then it makes its move. And here's the top of the critical range, and then we get our two targets here. Bitcoin has been very positive, in this bull trend. And here you get more of it. Last week was more of a digestive week as well, just digesting some of this, and we're still digesting some of that. And you can see sentiment was way below the market here, and it's shifted up with the market. So you had this digestive action that then shifted sentiment up, and that's what happens is the market digests. So I hope that was insightful. If you'd like to learn more and get more involved with our analytics and applications, come visit us at dharmacapital.trade. We have a virtual trade room you can come into, and we go over and teach and train on more in depth on all of our analytics. But enjoy the weekly outlook, and feel free to reach out to us if you have any questions. Good trading. Cheers.